You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Join us now for the expert source for inside information on the options markets. It's time for Options Insider Radio with your host, Mark Longo.
Welcome back to Options Insider Radio, the interview program here on the old network where we welcome on guests from throughout the world of options and derivatives and proceed to pick their brains for the benefit of you, the listener. My name is Mark Longo from theoptionsinsider.com, and if I sound a little bit different, it's because we're not coming at you from our studio in Chicago this week. Nope, we're coming at you from the Options Industry Conference here in scenic and sunny Miami, Florida. And our next guest is an old friend of the program, even though he hasn't been on in probably, I guess, about exactly a year. He is Rob Brogan, the Vice President of Equity Options over there at FlexTrade. Rob, welcome back to the program.
Hey, thanks for having me back, Mark. It's really good to be back. It's nice to catch up and see what's going on.
You know, it's always fun to do this conference because we get a chance to catch up with everybody. So let's catch us up. What has been going on? What has been lighting up your tape in the land of the flexing of trade since the last time you and I sat down to speak?
So we've been concentrating on a number of different things, primarily a little bit more TCA, a little bit more AI, I guess you could say. We've been really busy with our algo wheel and kind of putting that out there in the marketplace. It really has done a lot and seems to be very well received. Since we're broker neutral and it gives the traders the ability to trade with multiple brokers, but it also gives them the ability to kind of auto route some of their orders, right? And then kind of use the algo wheel and TCA combined to kind of take a look at, who's the best route for a low liquidity option, or who's the best route for a high liquidity option, and kind of make those decisions and look at what's going on in the space, and then kind of set the wheel up the way you want to set it up and have the orders just route. So if you want to just, hey, everything, under 50 contracts, I just want to route out there. So that way they can take time and that they need to work on their bigger orders and make sure that they're executed correctly.
And you mentioned the TCA, so you guys will offer that component as well. I know that's a growing aspect of the industry, right? Everyone wants to make sure not just that it's hitting the bid, but they make sure they get the optimal execution. So you guys are offering that component as well?
Correct. So we'll offer a TCA component. We'll monitor, mark against bench, mark against arrival, and kind of see how you're. And again, any kind of metric that you can think of, we can kind of incorporate into our TCA. We can kind of look at it. Hey, this is what our theoretical value is for this particular option, and how did we feel compared to that theoretical value for that option? So we can do a number of different things on the TCA front, and even customize it too. Take a look at, if it's fairly liquid, we can kind of look at a TWAP on over a specific time period and take a look at that as well.
So you got the TCAs, you got the algos. What else is lighting things up over there in FlexTrade land these days?
So we did put together a backtesting system.
Another hot area of the space. Everyone's come up to me at this conference these days. I have a backtest. It seems like everything old is new again. Everything comes in bunches. It's interesting how that works.
Yeah, so I mean, it gives them an idea of how their strategy is going to perform over time, and we can do it relatively quickly. So that's kind of what's really nice. So we can, in under 30 seconds, we can run through like a day of backtesting, so a day of data. If you want to look at a year's worth of data, it'll probably take us, a little under a day to process the backtesting on all of it. And again, we can take a look at, depending on the data that you have, we can look at a number of different things, whether it be volatility, whether it would be, kind of depth of market or just top of book. So really up to you on how you want to structure it, but the speed at which we can do it is really pretty impressive.
I know you guys are primarily, the equity and indices is kind of like your bailiwick, but do you have a lot of clients coming to you these days saying, we want to look a little farther afield for vol, maybe in the ags or the metals or other products? Or as you started, how's that purview over there? How's that focus at FlexTrade? Is there a lot of asset classes coming in under the umbrella?
Yeah, so we've branched out into options on futures as well. So we've had signed up a couple clients with regards to options on futures. So it's kind of a new space for us. We're doing all the analytics as well. So the pricing and analytics associated with them, it's slightly different, but still the same as equity options. So we put together a pretty nice package and signed on a couple people in that space as well.
Is that a new push for you guys going forward? Is it going to be an area you're concentrating on? Is it on the futures option side of the Spence?
So it's where we're concentrating, but it's also kind of market driven, right? So it's another area that we can push into, but we also have clients that are actually looking for it too. So they're looking for something that, hey, I can manage my portfolio on the same system that I'm trading on, and it gives them a little bit more insight into what they can do and how they can do it, and run some scenarios on that portfolio too, so they can see where the risk may lie.
And I've talked about that with a bunch of vendors who come through here over the course of this past week. The days of being a single asset class, service provider are kind of gone, right? We just focus on equity options or index options. That's nice, but your client's going to come to you, right? They have a whole book. They want to trade other stuff. So, that notion that you could just focus on the one thing, you probably could a while ago, but these days, I'd imagine if you say that to your client, they're probably going to look elsewhere, I would think. If you tell them, no, we can't do those crazy corn options.
Yeah. So again, yeah. I mean, with regards to options on futures and with regards to futures itself, and then again, we're also had a lot of success with our multi-asset platform. So now we can give a trading shop one stop for options, equity options, futures, options on futures, FX, equities. And we've just recently instituted fixed income too, which really hasn't electronified all that much as of yet. But we're trying to get ahead of the curve so we can have an option for them as well.
Be there when the big flow moves upstairs, right? You want to be ahead of it. You don't want to be behind it. That's certainly the case. Well, we're down here at the Options Industry Conference. I know you guys come down here every year. Obviously, there's a lot to come here for, just in your networking and all that, kind of catching up with clients. What is it that brings you guys down here to OIC? Are there any big announcements you guys have? Or are you kind of more here just kind of showing the flag and getting the lay of the land?
So not necessarily any big announcements. We like to be here mainly because we're a player in the option space, and if you're a player in the option space, you need to be here. Plus, it gets you the ability to kind of interact with all of the exchanges, so you can find out what's going on, what's new there, and you can also touch base with all your brokers. Us being broker neutral, we do business with every broker under the sun, and now they're all in one spot. So you can kind of touch base with each one of them, find out what's going on there, what's new with them. If they've got anything new in their algo space, any new suite of algos, or new players in this space, so you can meet up with them as well. So from that perspective, it gives us an opportunity to just re-engaged with everybody that we do business with.
You mentioned the different exchanges and things. Obviously, it's a predominantly exchange conference, so the big topic is always how many. And this year, there's more. We're up to 16 now, which is, we say it out loud like that, it sounds kind of crazy. But we have 16 options exchanges here in the U.S. I'm curious your guys' view on this because you come at it a couple different ways. If you're a market maker, God, it's a huge pain in the butt to have to connect all this. But for you guys, maybe as a vendor, fragmentation might equal opportunity. So how do you guys see that, the growing proliferation of exchanges out there? Is that kind of a pain because it's a pain for your clients, or is it maybe an opportunity for you guys?
So it's not necessarily a pain for us, mainly because we do have some internal algos that we use. There's a number of them. We've done some interesting work there, but we don't necessarily have to connect to every exchange. So it's not, for market data purposes, we get market data, but we don't have to connect to each exchange and aggregate that data. There's services out there that do that. And for execution, we're not connecting to every exchange for a smart order router. We'll connect to a broker dealer and use their smart order router. They're smarter at it than us, right? That's what they do. So we let them do that piece. We put some algos together. We have one algo that's actually working really well. Some of the news at the conferences always actually at the conferences, kind of liquidity seeking and fragmentation. So they're looking for liquidity. But, we put together an algo that kind of steps up and steps down. So, you can kind of have a hard limit, but, if your limit's within the bid-ask spread, and you're buying the option, we can start you out on the bid and kind of step up a tick here, step up a tick there. So in your less liquid stuff, you can kind of find out where the liquidity is. And then kind of randomize it and bring you up to your limit. And, if you don't fill on that limit price, we can bring you back down. So you'll get a little bit more price improvement and allows you to kind of manipulate the market a little bit to do what you need to do.
That's why you bring up liquidity. I'm curious, for a guy like you, a vendor who's out there kind of helping to seek liquidity for their clients with the algos and everything, how much of a pain are these auctions for you? They're kind of everywhere, right? And they're kind of fragmenting and really displaying a very limited set of liquidity. I'm sure that's probably a big part of your algos, right? Is trying to navigate within those auction environments. So how much of a challenge is that for you guys?
So I don't think it's necessarily a challenge for us, we allow our clients to kind of tweak algos. So we can put together an algo, we can have an algo built for them, we can custom design an algo for them, or they can take some of our off-the-shelf algos and then kind of tweak it to work best for them. So it gives them the ability to kind of seek out that liquidity. Dealing with the auctions is just part of the business, right? Would we rather not have to do that? Yes, yeah. but it is what it is, and ultimately, if it's getting the client a better execution, then that's what we're about, right? We want them to be able to, kind of get the execution that they want in a fast, efficient manner.
And speaking of liquidity, you deal with a lot of those firms, the trading firms, the prop shops, and things like that. It's been a challenging market, I would think. That audience in particular for the past couple of years. Obviously, 2017 was super quiet, so no vol going on, so that was challenging. And then it came roaring back to life in 2018, and that had opportunities, but also posed some challenges as well, as we saw in the marketplace. What's it been like for you guys, kind of trying to focus on it and deal with that market over the last year or so? What's it like going out there and trying to, put out new product and new software and get new prop shops on board when there aren't as many anymore and they're fragmenting and doing different things? It has to be, I think, a pretty challenging environment for you guys.
Somewhat. From a marketplace in general, volatility is kind of good for us, and the volatility that occurred in 2018 was good as well, right? From a couple different aspects, right? It allowed people to make money, right? Everybody loves a volatile market, and it generates funds. But what it also did was it kind of tested people's software and said, hey, is this software good enough for me? Is this software going to work for what I need to do? And it generated a lot of interest in what we do. So from that perspective, we got a lot of inbound calls looking, hey, I think we need to upgrade our OMS. I think we need to upgrade our EMS. It's not really doing the job that we need to do. So from that perspective, it's been really good. And
that's
not
a good thing, right?
Challenging.
Yeah. If your client wakes up on their own to the fact that they need something from you and they call you rather than vice versa, right? That's kind of a dream, right?
Yeah, it's kind of nice for a change. And people they have money in their coffers, so they're upgrading their software, and they want something that's a little more efficient and a little bit more speedy and can do the job for them.
That is another change at this conference from, let's say, a year ago when everyone last year was, it's kind of like a wake. They were wringing their hands. There's no, we were of course coming off of the 2018, but even in 2017, seeing it worse where there was no volume, there's no volatility. Oh my God, what are we going to do? Where's the future going to come from? Last year, of course, everyone was still, I think, in shock from February, so that hadn't really worn off yet. But this year, you're right. People are actually making money at their core business again, trading and volume and transactions and volatility, which is, I think, kind of a refreshing thing to see in the business. You're not seeing clients saying, oh, my God, we're going under, or having to grow through acquisition like we saw the last couple of years. People are actually surviving and thriving at their core business. It's got to be, I think, refreshing for a guy like you when you call up and say, hey, do you want to upgrade this, or do you want to buy a whole new whatever, all the new bells and whistles you guys have. You're not getting the hang up and say, oh no, we have no budget, or we had to fire 5 guys today. It's a little bit different environment right now.
Yeah, I agree with you. And again, and even in our industry, so software industry, OMS business, EMS business, you've seen some, I don't know if necessary is consolidation, but you've seen interest in buying them out, right? So Charles River, you see being bought. You see Fidessa, taken by private equity. And so you've seen some grab for what we do. And, we're still independent, which is great. And we're still dedicated to building, the best software out there, and that's really kind of what we're pitching. You look at some of our competitors, being bought up by private equity. What does a private equity firm do? They've got to, they see value. They've got to increase the value of that company, and they'll roll it out in a specific amount of time. So we're still dedicated to building the best software out there. So. And I think we're gaining a lot of traction in the marketplace.
Right. It is interesting to watch your aspect of the space in particular, because you're right. Fidessa, other big players have slowly been getting gobbled up over. Pretty soon you're going to be the last of the Mohegans here, Rob. It's going to be FlexTrade and all these leviathans out there playing in your space. Does that alarm you a little bit? Because there are deep pockets coming at you. But on the flip side, you're right. When sometimes private equity gets involved, sometimes there may be a little bit too many cooks in the kitchen, right? And maybe they kind of they force you to accelerate your timetable into something maybe you weren't planning to do, or maybe isn't the right thing, but because they need to monetize it, they need to get that out the door. So I guess that's the same kind of area where it could be a little bit intimidating, but maybe also an opportunity for you guys to stay a little nimble amongst all the other leviathans coming into the space.
Right. I mean, it does. It gives us a little bit more edge, I think. And we're still private, so we can be nimble. We can make changes on the fly. We can get things done. It's not being everything's not a rule, regulation, and a schedule and a time frame to get certain things done. We can kind of act quickly and get our customers what they need.
So next year when I talk to you, it's not going to be FlexTrade, a division of XYZ giant company. Then. You're on the record right now saying that, Rob, so it cannot happen. You are legally liable.
So my opinion that we will still be independent next year when we speak.
Well, it's been great to catch up with you, Rob. A lot of fun stuff going on here at the conference. A lot of fun stuff going on with you guys. But as we like to do here, let's leave them on a high note, leave them wanting a little bit more. So if you got something up your sleeve, Rob, maybe a little bit of a hint, a little bit of a tease you can leave our audience with what they can expect, aside from your pending acquisition, of course, but what they can expect coming down the pike from you guys at FlexTrade. Now is the time, sir. The floor is yours.
So like I said previously, options on futures have been a big concentration for us in getting out there in that space and getting things done. Also, kind of tweaking our algos. Our vol algos still great. Kind of tweaking our spread legging algo, and then our new algo that we put out that kind of steps up and kind of moves your price around, up to your limit and kind of randomizing some stuff and trailing hedges with the underlying, or kind of a pairs almost cross asset or cross class. So if you want to trade Apple versus like Microsoft, we can give you the ability to do that. So trade two different options, and allow you to do that. If you want to trade something that's less liquid against something that it's more liquid, or even trading an option on future against an equity option, we can give you the ability to do that too. So kind of almost pairs trading for options, and it's been pretty well received, and we can still tweak it and give you the ability to do what you need to do.
I like that. Sounds interesting. Pairs trading for options. I like that. That might be a good title for our conversation here. Well, Rob, I'm glad we could check in with you here at the OIC conference. We have to stop meeting in these great, fantastic locations.
Next year, it's in Puerto Rico.
I know. That'll be a fun one as well. So I'm looking forward to that. Looking forward to meeting up with you again. We'll have to do it more often than once a year.
Absolutely.
More often than once a year. And we'll look forward to seeing how all these new developments and the pairs trading and everything else, how it all unfolds in the marketplace in the coming months, sir.
Thanks a lot for having me.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.